Hello, guys, back here again. I've been seeing a lot of these videos on YouTube, which is turning $100 or £100 into $10,000 or £10,000 or something of such. And guys, I wanted to seriously cover this because honestly, this is a very risky thing to do. Not just from a trading perspective in terms of technicals and understanding, but also from a psychological perspective, which I'm going to break down, of course. So, what tends to happen when people turn $100 or pounds into 10,000? First of all, we have to acknowledge that this is a gambling behavior. This is not a professional behavior. Many reasons for so. So let's break him down one by one. First of all, to turn 100 into 10,000 within whatever time period that they say they will do it, which is definitely not years or decades, which is in theory that's how long it should take from a mathematical standpoint. They are gambling. They are gambling. They're at least potentially, risking anywhere between 2/3 to half of their account to be in a position to do that. And what tends to happen with that is that, in theory, every trade that you take is generally a 50-50 trade, where there's a 50% chance of you winning your money and a 50% chance of you losing your money, but in the sense that you're literally losing 50% of your money or 60, anywhere within that region. I think there's people that do it with 100% of the actual money itself, with brokers that allow you to over trading your margin. So there's now an argument for which brokers are they using to actually do these type of turnovers. So I don't want to go as far as saying they may not be FCA regulated or so. They might be offshore brokers, who knows. But hey, I'm not going to go down that route, but you guys can do your own research to that. But more importantly, what needs to be actually thought of is the fact that we are not taking into account one of the biggest principles or universal principles of trading. Now, there is a book called Universal Principles of Trading, I believe. It's by Brent Penfold, and he talks about something extremely important, which is called the risk of ruin. The risk of ruin is, in theory, a mathematical equation that makes you aware of how many trades you can physically take before you blow up. And for every person that wants to take trading seriously, that is a must read. That is a must understand before applying to your trading. Now, this is not a matter of having an edge. This is not a matter of having a setup. This is a matter of statistics and mathematics. And from a mathematical standpoint, there is nothing physically wrong with turning $100 into 10,000. However, it's not taking into consideration the other side of risk, which is the risk of losing, which it's not spoken of in these videos. These videos, I personally believe, there are a wrong message to the trading crowd. And I honestly believe this is why most professionals that do this for a living look at us retailers as all gamblers and literally just trying to get lucky. If you go to the bank and you were able to turn $100 into £10,000 in the space of, 2 months, 3 months, whatever it is, and you actually show them that you've done it in a risk management, in a well risk managed manner, they will bite your hand off. They will literally plead for you to work. But as we clearly know, that is not even the case. They will literally laugh you out of the door because they know that you're completely over risking. So people really need to understand that from a psychological standpoint, guys, you are gambling. You're not trading. Trading is not about risk taking. Trading is about risk managing. And I'm sorry, if you're trading more than 50 to 60% of your account, maybe 80, 90% of your account, you're risk taking. And that's not the name of the game. The name of the game is to stay in the game. You're not staying in the game by risking almost half of your capital. Now, it may be $100. I get it. Probably nothing to some people. Fine. But if you're looking to do this for a career, that should be treated with the same deserving and respect of 100,000, because we're not here for the numerical price at the end. We're here for the increase of percentiles over time. I want to see if my edge plays out over time. So yes, you should really and truly be trading at $1 per trade. So think about it. If now you're risking 1%, 2% per trade, so maybe tops $2, and you've made in theory $10, well, congratulations. It's not really great, but that is 10% of an increase. But if you can do that with large amounts of cash, therefore 100,000, 200,000 or so, now we're talking 10,000, 20,000. The return is even better. The return is worth something. And on top of that, this is just, I believe, just principles and laws in the universe. There's no such thing as getting rich quick. No such thing. As we've seen multiple times, lotto winners, they are able of accumulating these crazy amounts, but then they blow it over time because they don't have the financial literacy. They don't understand how to think. I'm sure you guys have seen multiple times that if you win the lotto company will give you options to either take the money in installments or take the money in one stock. But with so, they still have to give you access to a psychologist. They will pay for your psychologist so that you can get into the correct mindset to manage that money. Most people tend to refuse it, hence the reason why they blow it all up. So in theory, at the end of the day, guys, the house always wins. Now, you can get lucky. You can have an amazing run, which will lead to that $100 to 10,000. However, that is not within the normal distribution. That is not what the average will give you. These are outliers. These are, I'm going to call them glitches within trading. It's not always as simple as that. You can get very lucky for the first 5, 6, 7, 8 trades and turn your $100 account into maybe 5, 6, 7, 8,000. Amazing, and now maybe you can risk less to do a little bit more. But at the beginning, it's gonna be extremely hard for you to do that. And if you're doing it, you're definitely getting lucky. This is not a process that can be sustained. And I'm sorry, I'm not here to play games. I'm not here to be a lottery winner. I'm here to stay in this game for as long as I possibly can. Now, yes, it's attractive and is extremely is extremely alluring to the crowd, because hey, if I can turn $100 into $10,000 in the space of 4 or 5 months or 4 or 5 weeks, whatever it is, who wouldn't do it? But what's on the other side of that? How many people have successfully done that? How many people have successfully shown you with correct stats and risk management that this can be done again and again and again and again? Once again, from a mathematical standpoint, there is nothing wrong with that. But maths is perfection, and trading is not perfection. Trading, as we know, it can only take one trader to negate your idea, your trading idea, and before you know it, you've risked 50% of your account to try and double it, and here you are. You're in a position where you haven't made that happen, and you've actually lost 50% of your account. So once again, guys, be very careful with these trends. I mean, if you have $100 to blow, by all means, let us know how you got on. Let us know if you did do that. Let us know if you were able to turn it around. Show us the stats, prove the stats. But most times out of 10, this is not going to work for everyone. This is not going to work for most people, because once again, this is an outlier. And you need to understand the difference between outliers and averages. In trading, we work with averages. We want the average because the average gives you clear stats and clear returns of how well something's performing. If you have an outlier, although it may be in your favor to make money or to get you rich, amazing, but it's not something that's eventually going to be sustainable. You want to be very careful with that, guys. So I hope that's clear. Once again, engage with us. Have you done it? Have you been in a position where you've turned $100 into 10,000? If you so, let us know about your experience. Or have you tried? Have you attempted? Did it work for you? Did it not work for you? What did you eventually learn? How many times did you do it? How many times did you try it? And did you eventually just give up? Let us know in the comments. We might be looking to maybe do it within the office just to, give it a bit of a follow, you could say, and see if, hey, you know what, are we actually getting lucky here, or is there something that maybe me myself can be wrong about? Maybe it can be done. Now, once again, going back to what I've learned from Brent Penfold's book, which I think is called The Universal Laws of Trading, the risk of ruin is the most important thing. Understanding that I'm in a position where I need to trade X amount to give me X amount of potential shots in the market, depending on my system, which is obviously my back-to-back losses and back-to-back wins. I'm very much aware that I'm not risking any more than 2% per trade. Normally I trade 1%, but the most I'm ever going to do is 2% per trade. But hey, people can get lucky. People have got lucky. Whether they get to retain the profits is completely another thing. But once again, like I said, from a mathematical standpoint, there's nothing wrong with that. But we know that trading is not an exact science. So let us know in the comments, guys. Take care, have a good one, and we'll speak soon.